What's up everybody, welcome back to AZ Trading, and in this video I'll be showing you guys two quick examples of how I would backtest the RMR pattern, as well as an ongoing trade from today where we've captured around 150 points so far. And here's just a quick sneak peek of my executions and the labels. You can see my entry and my two partials. So stick around and I'll be giving my analysis on how we found this trade and how we can find similar trades in the future. But first, I just want to give a quick shout out to all of you that have been watching my videos. We're actually getting super close to 250 subs, and as soon as we reach that milestone, I'll be working on a subscriber special video, which you can look forward to. And if you haven't seen my first subscriber milestone video, which was at 100 subs, it's this one over here where I released my personal risk calculator that I made on Excel. So check that video out if you find yourself not knowing what position size to use. So all three trades here were made using the same pattern, which we call the RMR pattern, where first we look for a raid, second we look for a market structure shift, and third we look for a return area. And this is where we get into the trade, which in most cases is either in a gap, it could be in an order block, or using a fib. So I'm just going to zoom in into this first example down here. So I've just zoomed into this area, and the first thing we look for is the raid. So if we have a look at the swing highs being made, we have these relative equal highs. And if we look at the swing lows, we have these relative swing lows. So as price breaks through those swing highs, we can call that the raid. The second thing we look for is the market structure shift. So after bullishness with higher highs and higher lows, we look for lower highs and lower lows. And as soon as swing lows start to be broken, that's what we call the market structure shift. So if we have a look after this bullish raid, as soon as it starts to break these swing lows, that's what we can call the market structure shift. And finally, the third thing we look for is the return. This is where we participate. So if we look for a few gaps, there's one right here, and there's another one just down here. So when price retraces into that area, you can place your short, placing your stop at the raid's high, and then looking for objectives below. And if you missed this first entry, there was also a gap down here, so you'd have another opportunity to enter your short. If you're not using a gap, you could use an order block, so we have one right here. If I extend that one out, once price retraces back into that area, that's where we can place a short as well. And then when looking for objectives, you could take off a partial at these relative equal lows, and you could time your partials at London close, which is 12 o'clock midday, so you could take off a partial right here as well. I don't want to spend too much time on these backtesting examples, so I'll just move on to the second one. I've just zoomed out into a 5-minute chart. So first we look for a raid. So as soon as we break through these relative equal lows, that's the raid. The second thing is a market structure shift. So after a bearish raid, breaking swing highs makes it a bullish market structure shift. And the third step, the return. So we have a gap that's been presented during that market structure shift. If we extend that to the right, once price retraced into that gap, that's where we can place our long with our stop at the bottom of the raid, and then we can look for objectives above once again. In this case, we have a couple swing highs over here, as well as a gap all the way on the left over here. So they can be your potential objectives. Alright, that brings us onto our current example, which is painting as we speak. So using the same pattern as the previous trades, first we look for a raid, and we can see that below these relative equal lows, once we stabbed through that area at 8:30, we can call that the raid. Next, after a bearish raid, we look for a bullish shift, so breaking swing highs. Once these swing highs are broken, we call that a bullish market structure shift. And last but not least, the return area. So during that bullish market structure shift, we can see a large gap printed. If we extend that to the right, you already know when price retraces into that area, that's where we can place our long with our stop at the raid's low in most cases, and we can look for objectives above. However, you can notice that since this gap is quite large, placing a long order at the top of the gap is actually not a very fair price. It's not a very good price. So the way that we could determine whether we're getting a fair price is by using a fib retracement. So if we draw an anchor point from the bottom of the swing, so the bottom of the raid to the top of the market structure shift, if I extend that one out, you can see that a fair price would be considered if price dropped below this 50% level, making it a discount in price. So even though price is retracing and returning into this gap, we don't want to participate whilst we're in a premium. We want to wait until we're in a discount, so below the 50% level. And as you can see, as price retraced into a discount below the 50% level, that's where I placed my long order. Once I placed that order, could never forget about your stop loss. So for me, it's at the bottom of the RAID, and then look for objectives above once again. For my first objective, you can see at this swing high, this is where I took off my first partial. And right after I took that partial, 9:30 ticked, so the equity market opened, and we had this immediate bearish retracement. And you can imagine during the equity open, everyone will be in front of their charts and they'll see this strong bullish movement. So they'll all be buying more and more and more until they get stopped out by this bearish retracement. And at that point, they'll be too afraid to place another long position after seeing this strong bearish retracement. And that's exactly what the market wants to do. It wants to manipulate as many people as it can before it goes on for its larger move. So over here, you can see that my position went through around 30 points of drawdown, and immediately after price pumps up and I took off my second partial. If I zoom out to the left, you'll be able to see why I took off a partial there. So here on this 15-minute chart, if we look to the left, we have this 15-minute gap. If I extend that one out to the right, once price reached that 15-minute gap, that's where I took off my second partial. I'll just turn on my orders as well, so you can see that after I took off my second partial, I've reduced my stop loss to the break-even level. So whether the trade runs to my further objectives or stops me out at break-even, I'm impartial to whatever happens, so I can do whatever else I need to get done. So for the rest of this trade, you can see I've set a sell limit for 15% of my original position. So if price managed to reach that, I'll have 10% of my position running, which I'll close at the end of the day. Alright, that'll be it for this video, guys. It might be a slightly longer one this time, but please let me know in the comments what duration of video you prefer. Thank you all so much for watching once again. Please hit that like and subscribe button, it makes me very happy. But until next time, take care guys. Peace.